What's up guys? In today's video, we are going to be diving into one of the most precise tools in price action trading, breaker blocks combined with standard deviations. And make sure to stick around because at the end, I'll give you my free Notion checklist for this trading strategy and a risk calculator. So without any further ado, let's get into it. Okay, so first we'll do a recap of bullish breakers and bearish breakers. So a bullish breaker, price action is going to create a swing low. After that, price is going to drive lower, clearing out the sell side liquidity. This is known as the manipulation leg or the stop hunt. Price is then going to sharply reverse into the opposite direction, breaking this structure. And the key is you want this candle to close above the high, and that will confirm the bullish breaker block. So the breaker block will be the range of up close candles right before the manipulation leg. Then you can put your limit orders at the breaker block and price should retrace into the block and then reverse away. A bearish breaker block, price is going to create a swing high. Price is going to drive up, clearing out the buy side liquidity. Then it will sharply reverse, breaking the structure. And you want to see a candle close below this low to confirm the bearish breaker block. You can put your limit order right at the breaker block. Price should retrace into it, filling your order and then sharply moving away. Okay, so what is a high probability breaker block? A high probability breaker block is going to form after it is traded into a level of liquidity or a higher time frame PD array, and we'll go into a little bit more detail later on in this video. So let's see what happens here. Price created the swing high. It traded into the liquidity, creating a busy fair value gap. Then it trades down, closing below the fair value gap, converting it into an inversion fair value gap. And at the same time, the move lower created a sub fair value gap and closed below the low, confirming the breaker block. And as you can see, we have an overlapping inversion fair value gap, a normal fair value gap, and a breaker block. So this, in my opinion, is a A+ setup. So sometimes you won't see the inversion fair value gap, but only the fair value gap and the breaker block. And that I consider as a A setup. So you can put your limit order at the breaker block or the fair value gap, whichever one is the closest. So sometimes the fair value gap might be lower. It might be in this area right here. Then you can put your limit orders in the fair value gap and then price should trade into it and then sharply move away. And then the next thing is, which is the most important thing, is time. So you want to see the breaker block form around the hourly mark. So for me personally, I normally watch for the breaker block to form in the New York session around 10 o'clock or 11 o'clock AM Eastern Standard Time, also known as New York time. So you can go to TradingView and put your chart on New York time, which is normally UTC -5, depending on the daylight savings time. Okay, so time frames. So which time frames are we going to use? So for a point of interest, we are going to use the 1 hour, the 4 hour, and the 15-minute time frame to find discount or premium PD arrays. And a PD array is something like a breaker block, a fair value gap, or order block. There's a bunch of them, rejection blocks. But these are the three that I mainly use: breaker blocks, fair value gaps, and order blocks. For liquidity, we are going to use the daily time frame to mark out the previous day's low and the previous day's high. And then I use the 15-minute time frame to mark out the kill zone session liquidity. Now I have a dedicated video on kill zone session liquidity. I'll mark it at the top corner of this video. It's called the One Trading Setup for Life, based on a video that ICT did a year or two ago. For entry, we are going to wait for price to trade into one of the levels from 0.1 or 0.2. So either into a higher time frame PD array or a level of liquidity. And then we are going to go down to the 2-minute time frame and wait for the breaker block setup to form. So the breaker block setup is going to be a breaker block with an overlapping fair value gap, or a breaker block with an overlapping inversion fair value gap and a normal fair value gap. All right, so standard deviation. So first of all, I'm going to show you how to set up the standard deviation tool. So in TradingView, select the Fibonacci retracement tool. Once you've selected your Fibonacci retracement tool, pull a fib on your chart anywhere, it doesn't matter. This is just for the setup. Right click on the fib, then go to settings, and these are the settings that you want to fill in. It's going to be the 0, the 1, the negative 2.5, and the negative 4. So negative 2.5 is going to be 2.5 standard deviations, and negative 4 is 4 standard deviations. Next up, once you've filled in the different standard deviation levels, go to the bottom, click on template, click on save as, and then you can give it an appropriate name. So for me, I used breaker block standard deviations. So doing this, you won't have to do the setup every time you pull your fib. We are going to save it, and I'll show you once we get into the examples how to access the template that we just created. Right, so once you've set up your fib tool and you pull it on your chart, it should look something like this. You'll have the 1, the 0, the negative 2.5, and the negative 4. So 2.5 standard deviations and 4 standard deviations. So how are we going to use the standard deviations? So for a bullish breaker block, we are going to pull the fib from the bottom of the manipulation leg to the top of the manipulation leg. Then it should look something similar to this. We'll have our 2.5 standard deviations and the 4 standard deviations. For a bearish breaker block, you're going to take your fib tool, you are going to pull it from the top to the bottom of the manipulation leg or the stop hunt leg. Then you will see the 2.5 standard deviations and the 4 standard deviations. So how are we going to use this in our trading? So the standard deviations are going to be used for our take profit levels. So TP1 is going to be at 2.5 standard deviations, and we are only going to move our stop loss to break even once price has taken out TP1, which is 2.5 standard deviations, and we are going to keep our runners until 4 standard deviations. Right, so for the checklist, I created a checklist in Notion, and I'm also going to give you a risk calculator. Let me quickly grab that, and then I'll show you how we are going to use that. Okay, and this you will be able to find for free in the Discord. So the checklist is going to be a combination of a checklist and a journal entry. And I'm also giving you the risk calculator. So risk management is the single most important concept in trading. So for instance, if you are willing to lose a certain dollar amount, just for this example, I'm going to use $250. That is the amount that we are willing to risk. And I'm trading the micro NASDAQ. So you go to your chart. Okay, so right here we have a visual representation of the price action. The price traded down into a key level, either a level of liquidity or a higher time frame PD array. This is the manipulation leg that we discussed. Price drives up, closes above the high, confirming this as our breaker block. And for the example, we are going to say there was a fair value gap right there and an inversion fair value gap right there. All right, so regarding the Fibonacci tool that we set up earlier, let's say for instance you pull your fib, but it does not show you the one that we previously set up. You can just click on it, go into the settings, go back to template, which is right at the bottom left corner, and I saved mine as BRKSTD, so breaker block standard deviations. Click OK, and then you'll see it will change to the one that we configured previously. We want to pull the fib from the bottom to the top of the manipulation leg for a bullish breaker, and then we'll see we have the 2.5 standard deviations and the 4 standard deviations. All right, so going back to the stop loss, so let's say we enter at the top of the breaker block. Our stop loss is going to be right at the low of the manipulation leg. You can put it just slightly below that. All right, so on the stop loss tool, it shows us that we are risking 106 points. So this is a lot on the NASDAQ, but this is just for the example. And then we go to the risk calculator. We fill in 100 points is the stop loss value. Click on calculate, and it will show you that you can use one micro contract to risk $200. Let's say you have a bigger account where you can risk, let's say for instance, $2,500. Click on calculate. It will tell you that you can use 12 contracts, but you can also go to the contract multiplier, select NQ. So there's a bunch here. I've got NQES, the Dow Jones, we've got crude oil, gold, and silver, and the respective micro contracts as well. So let's say because we can risk a lot more, we are going to use the E-mini contract instead of the micro. Click on E-mini, press calculate, and it will show you that you can use one contract to risk $2,000. Right, so you can find this for free in the free Discord. I'll leave a link in the description below. All right, so let's get into a couple of examples. Okay, for the next example, I'm going to show you how to use the checklist with the trading setup. So you can just click on new right there. It's going to bring up this little window. You choose the asset that we are going to trade. So let's say it's the NASDAQ, day of the week. Just going to say Wednesday. You can put in your draw of liquidity. So this is for analytical purposes if you review your journals. So let's say it was a daily fair value gap. The direction, the example we are going to use is going to go short. So okay, so for our first example, we had the New York morning session, then the New York lunchtime, and you can get these levels, like I said, in the ICT1 setup for live video. I'll put the link in the description of this video. So let's see what happened here, right? So this was the highest high during the New York lunch session, and the lowest low for the New York lunch session was right there. So if you want, you can mark out those levels using a trend line. All right, so we've defined the liquidity levels. We have the buy side liquidity right there and the sell side liquidity right there. So let's have a closer look at the price action. So right there, we have a swing high, right? Then price traded up into the buy side liquidity and then broke down. So let's mark it out. So that will be our breaker block right there. So the range of down close candles right before the manipulation leg. This is going to be our bearish breaker. And then we had a inversion fair value gap right there. All right, so in my opinion, this is a setup, not an A plus setup. So for A plus setup, we need a breaker block, an inversion fair value gap, and a fair value gap. But this is an A plus setup as long as you have a breaker block with an inversion fair value gap or a fair value gap. That will give you a setup. So now we are going to take our Fibonacci tool for the standard deviations and we pull it from the high of the manipulation leg to the low of the manipulation leg. Right, as you can see, you could have put your limit order right there at the bottom of the breaker block with the high, or with the stop loss right at the high of the manipulation leg, and that is a 2.5 risk to reward ratio, and that is a 2.5 risk to reward ratio to 2.5 standard deviations. As you can see, price came back into the breaker block, then started to break down. You can see how it found a little bit of support right at 2.5 standard deviations and then started to break down to eventually give you the 4 standard deviations for a total of 287 points on the NASDAQ. Let's go back to the chart. Right, so right here we have the New York lunchtime session buy side liquidity and the sell side liquidity, right? Switch that off. All right, so we have the New York lunch session high right there. Price trades into that liquidity, and you can see this formed right around the hourly mark. Zoom in a little bit. All right, so price created the high. It drove up into the liquidity, creating that fair value gap, which will eventually be flipped into an inversion fair value gap. Right, so we have the range of down close candles before the manipulation move. That will be our breaker block. And I like including the low as well. So you'll see there is a green candle, but the lowest low of this little range of candles is that low right there. We have our breaker block, and then we also have a fair value gap right there. So this is an A plus setup. All right, so we have an overlapping breaker block, fair value gap, and inversion fair value gap. So you can choose the closest one to take your entry on. In this case, it is the breaker block, although it also traded into the fair value gap. So that is where we will enter with our stop right above the high of the manipulation leg. And then you are going to get your Fibonacci tool for the standard deviations. And you are going to pull it from the high of the manipulation leg to the low of the manipulation leg. TP1 is going to be at 2.5 standard deviations and TP2 at 4 standard deviations. You can see our price found support at 4 standard deviations, and then eventually we got a bit of consolidation, but then it started to reverse to the upside. All right, guys, I hope you found this video insightful. If you did, please remember to hit that like and subscribe. And if you are in the market for a prop firm account, check out the description below for the best discounts. And I will see you guys in the next video.